Here's what to look for on Wednesday, December 15th. We'll get a look at consumer prices, and they are forecast to rise. Higher energy costs showed up Tuesday in November's producer price data, and it's likely businesses passed at least some of those costs on to consumers.
We expect CPI to have risen by one of the fastest gains so far this year, evidence that both import prices and wholesale prices are feeding through to the consumer in final prices. In the core, it doesn't look to be enough to lift that off a year ago record low advance. So it'll be some time yet before inflation gets to the point where the Fed feels it needs to act.
The Fed said Tuesday inflation remains subdued and it would continue with its $600 billion bond buying program. We'll also get numbers Wednesday on industrial output. Economists expect output rose 0.3% in November after a flat reading the month before. The bond market will begin Wednesday after interest rates hit their highest levels in 7 months. The price of the 10-year plunged Tuesday, sending yields soaring. A similar story for the 30-year bond. Economist David Malpass tells Reuters Insider the market is anticipating stronger economic growth and returning to where it would have been without the Fed's QE program.
Two things happened in the summer that drove them very low. One was the talk of a double dip, and the other was the Fed said they were going to be buying bonds. So the bond yields fell and fell to the point where the Fed actually started buying bonds, and that was a sell the news kind of event. So now we're just rapidly playing through that sell the news event.
But Malpass says he does not expect yields to climb much higher from here in the short term. Adding to optimism about the economy, the Obama tax deal, which is making its way through Congress. Wednesday, it could hit the House of Representatives. Democrats there are meeting to talk strategy tonight. They could decide how strong their resolve is regarding the estate tax, which they say is too generous to the wealthy. And a big IPO will be rolling onto Wall Street Wednesday. Swift Transportation, one of the largest truckload carriers in North America, prices tonight and starts trading tomorrow. Reuters investment banking specialist Richard Lee says there could be upside potential.
If Swift Transportation prices at the mid-range of their IPO offering price at $14, they would be the second biggest publicly traded trucking company behind J.B. Hunt. Now, that only values them at 7.4 times EBITDA. If you look at their peers, they're all trading at an average of 9.4 times. So if it trades up to the average, you're talking about a 25% premium here.
Walmart stores and its subsidiaries are Swift's largest customer and account for about 10% of its revenue last year. Crucial deadline tomorrow in the Bernie Madoff Ponzi scheme. Court-appointed trustee Irving Picard has until Wednesday to file cases against entities who may have benefited from Madoff's fraud. For a look at all the events we're monitoring here for you, check out the Reuters Day Ahead. You can access it through Top News U.S. companies or type the word day, then a slash and U.S. into a news browser in your Reuters 3000 Extra or Reuters Trader North America desktop. I'm Rhonda Schaffler. This is Reuters Insider.